bank overdraft is a way to borrow money from your bank when your account balance goes below zero. Imagine you have $100 in your account, but you need to make a $150 payment. Without an overdraft, this transaction would get declined because you don't have enough money. But if you have an overdraft, the bank covers that extra $50 for you, allowing the payment to go through. In simple terms, an overdraft is like a short-term loan from your bank. It helps you cover unexpected expenses or emergencies when you don't have enough cash on hand. But of course, there's a catch. The bank doesn't lend you this money for free. They charge interest or fees for any overdraft amount you use. There are two main types of overdrafts: authorized and unauthorized. An authorized overdraft is one you arrange with your bank in advance. You and the bank agree on a limit, say $500, that you can dip into when your balance goes below zero. Since the bank approves this, the interest rate and fees are usually lower, and the terms are clear. You know exactly how much you can borrow, and the bank has already agreed to this limit. An unauthorized overdraft, on the other hand, happens when you go below zero without arranging it first. For example, let's say you only have $50 in your account, but you accidentally make a $100 purchase. This could lead to an unauthorized overdraft. Banks often charge much higher fees and interest rates in these cases because they didn't approve the overdraft in advance. So, it's always better to set up an authorized overdraft if you think you might need it. Why do people use overdrafts? Overdrafts can be helpful for covering short-term cash flow gaps. Maybe you need to pay for car repairs a few days before your paycheck arrives, or you have an unexpected medical bill. An overdraft can bridge that gap, allowing you to handle these expenses without waiting. It's a safety net for small, unexpected financial bumps. But it's important to remember that overdrafts aren't meant for long-term borrowing. Because banks charge interest and fees, the cost can add up quickly, especially if you don't pay it back soon. Think of it as a tool for short-term needs, not a solution for ongoing expenses. Here's a quick example. Let's say your account balance is $0 and you have an authorized overdraft limit of $200. You use $50 of that overdraft to cover an unexpected bill. Now your account is at negative $50. You get charged a small fee or interest on that $50 every day or month until you repay it. If you don't add funds to your account to bring the balance back to positive, the fees will keep adding up. If you repay the overdraft quickly, the fees are manageable. But if you keep using the overdraft or leave it unpaid for a long time, those fees could become expensive. Some banks offer overdraft protection, a service that automatically moves money from a linked account, like a savings account, to cover an overdraft. This can be cheaper than paying overdraft fees. However, it depends on your bank, so it's worth checking if overdraft protection is an option.